Welcome to Markets Now. I'm Michelle Rook along with Randy Martinson Ag. Seeing some mixed trade in the livestock futures with cattle lower, hogs to the plus side. Greens have been leaning mostly lower with a few exceptions in some of these July contracts like July soybeans. But Randy, let's start talking about new crop corn and soybeans. You got December corn above $6. You got November beans above $13.50. We've had a big rally. And so we did see a little bit of profit taking, maybe a little hedge pressure here this morning, didn't we?
I think we did. I mean, Friday, when the markets were peaking out, I think there was a lot of advisories that put out recommendations to make some catch-up sales or get some sales on the books. And, we've, like you said, we've rallied this market pretty good. This is a weather market. It is a supply issue, and those usually don't have a lot of legs. They don't have a lot of time from shelf life. We normally run these for about 10 days and then start to see the market retreat again. So I think that the fact that we've got up to these levels, there's certainly sellable levels and good levels that we haven't seen since spring. So I do think that caused some of the profit taking and some of the hedge pressure that hit the markets late Friday and this morning.
Well, you would expect it. We've had over a $2 rally off the lows in November beans and over a buck on December corn since those lows a couple of weeks ago. So it's time to reward the market, isn't it?
It is. I mean, if you don't, the market doesn't think you appreciate the gain. So, I mean, yeah, you have to take advantage of it. I do know that there are going to be some producers that be a little reluctant to price because there is some rough looking crop out there because of the drought situation. And that is also adding some, fuel to this fire yet is we keep seeing rain added into the forecast and taken out of forecast. Right now, this morning we had the little less rain in the forecast for, of course, the eastern and the central corn belt. Now, the western corn belt and the northern plains does have rain in the forecast.
Right. And so we've been trading forecast to forecast. That's not unusual during a weather market, but a lot of the trade is kind of in that prove me or show me mode, aren't they? Because we've had so many of these forecasts that have not confirmed.
That's right. I mean, yeah, I mean, we've been seeing a lot of forecasts calling for rain, and by the time it comes around, it's a tenth or less, and enough to settle the dust is about it. So, yeah, I think that helped to push the market last week was the fact that we kept forecast the calling for rain, but nothing ever developed, and I think that helped push the market a little bit more. Now there seems to be a few more chances, and I think the market is waiting to see what the afternoon's crop progress, crop condition ratings are going to say.
Yeah, let's talk about that because do you expect crop ratings to be down? And if we are, will we shoot back up again here in corn and
I,
beans?
I do think that we will see another reduction in the crop ratings, especially when you look at it for the northern plains. I do think we'll see some lower ratings. I do think Illinois and Indiana and Ohio will see some lower ratings as well. So I do expect that this market will see a little bit of a bounce off of the lower ratings. Now, if they get rain, we might see things stabilize here next week. But for right now, I do think we're going to see a lower ratings.
It's not a one-to-one. There is not necessarily a huge correlation, crop ratings to lower yield. But do you think we're losing yield right now, or is the market trying to figure out what that yield loss might be?
Well, I think they are trying to figure it out. I mean, right now, because of the dry conditions and the fact that we're getting close to some critical crop development stages, with a lot of the corn in Illinois, central Illinois, and Indiana getting close to being pollinated or getting close to tasseling, and even in Iowa, that we're starting to lose some yield potential, especially USDA's got a record yield projected. And it's going to be tough to accomplish that task, I think, at this point. And even up here in the northern plains, we start getting some rain. We're going to fall short of hitting trendline yields.
That's right, because spring wheat areas, you're supposed to get some rain, but that heat certainly hasn't helped that crop up there, has it?
It hasn't. We're looking at 90 degrees, 30-mile-an-hour winds on Monday. On today, we're looking at 100-degree heat in a lot of the region with wind again. Rain's not supposed to come in until Thursday after another 90-degree day. So, we're actually seeing more 90-degree days than not 90-degree days, which is not normal for us up here. And without the rain, it certainly is taking a lot of life out of that crop.
So, not that we're paying a lot of attention to it right now because weather's the focus, but we are coming up into end of month, end of quarter, and those big reports, both quarterly stocks and the acreage report, which can be explosive. What are you thinking early on here about acreage?
I'm sticking to my guns, which I've been thinking we're going to see about a 500,000 less spring wheat acres just because of the late planting that we saw. I think we're going to see 500,000 less corn acres as well. I mean, most of the acres increase was for corn and soybeans was expected to come in North Dakota, Minnesota, and South Dakota. I don't think all those acres got planted. So I do look for prevent plant to have, about half of what we saw for last year. But I do think we're going to see lower acres for both the corn and for the wheat side of things.
Okay, but not soybeans?
I don't think we'll see lower soybeans. We already were looking at a steady crop. I don't think North Dakota is going to see the increase in acres, but I do think that as far as the nation, we're not going to see much of a change from last year.
Okay, cattle market has been consolidating here today, and of course, we're awaiting cash trade. That'll be the big key for this week. Lower cash last week. What's your call this week?
I think we're going to see a steady cash trade. I mean, again, the Packers, I think, are going to be trying to start getting product in. If they're not getting ready for the 4th of July holiday, I think they're going to prepare for that. They did have better demand for, of course, the previous holiday. So I do think they're going to gear up for that. That'll help bring in some product. But I don't know if the supplies are going to be there. They're going to be pulling ahead, I think.
Yeah, and with the futures discount to cash, you really feel like you can't fall too far here on these futures.
Especially the live cattle side. No, I think that market has got a floor underneath it because of its discount to the cash.
And hogs, another gap higher open this morning. Are we starting to run out of steam, do you think, or not?
I think hogs have a little bit more room. I wouldn't be surprised to see maybe a profit taking, but I think they're going to wait to see where the hogs and pigs report estimates come out next week. If we see a big reduction in the sow herds, I think that could help keep this rally alive.
Yeah, plus cash trade has really come on strong here and helped us with this rally as well. All right, thanks so much for joining us. Randy Martinson with Martinson Ag. That's Markets Now.